Health insurance is a financial investment in your health. And whether you choose to go with employer-sponsored group health insurance or a marketplace plan or private insurance, there are costs that you need to be aware of. But what exactly are the costs associated with health insurance? Well, we're going to go over that in today's video. Welcome to our channel. As always, if you have any questions, please feel free to connect with us in the comments or give us a call at the number on the screen. And please, if you do find any value in this video, we hope you'll take the time to click the like button and of course make sure to subscribe. So let's break down all of the costs associated with health insurance. We're going to start with your monthly premium. So your monthly premium is the amount that you pay on a monthly basis to keep your insurance active. If you don't pay your monthly premium on a given month, then your insurance carrier may drop you and you may lose access to your benefits. If you get insurance through your employer, this is called group health insurance. Your premium will likely be deducted from your weekly or bi-weekly paycheck. And if your employer has more than 50 full-time employees, they are required under the Affordable Care Act to provide health insurance to you and your dependents until they turn 26. Additionally, they must contribute at least 50% towards the monthly premium. Now, should you leave your job and enroll in COBRA, you'll be responsible not only for your portion, but for your employer's portion as well. That's why COBRA can be extremely cost prohibitive, so really it's only recommended for very short durations as a stopgap. Your employer may offer you several plans to choose from, and of course the premium is determined by the plan that you choose. For example, you may have a choice between an HMO and a PPO. Generally speaking, HMOs will have lower monthly premiums, but they offer less flexibility. Usually PPOs will have higher monthly premiums because they offer more flexibility. And of course, you'll be able to choose from an individual plan. It may be referred to as an employee-only plan. You may have the option to do employee plus one or employee plus family. And which plan you choose will of course affect your monthly premium. Group health insurance plans will of course be much less expensive when compared to other types of health insurance. This is because your employer receives a discount by purchasing the plans in bulk, and of course they contribute that 50%. Something additional to note about group health insurance plans is that you cannot be denied or charged more based on your health or pre-existing condition. This same rule also applies to marketplace plans. So these are plans that are purchased through healthcare.gov or your state's individual marketplace. Like group health insurance plans, your monthly premium is determined by the plan that you choose and the carrier that you choose, and whether it's an individual or a family plan. Now, marketplace plans can come with a bit of sticker shock if you've had group health insurance in the past. However, if you're eligible for a premium tax credit, you may be able to save thousands of dollars per year. A premium tax credit is just a tax credit that's paid up front. This is reflected in a drastically discounted monthly premium for those marketplace plans. And your eligibility is determined by your income and your household size. In the past, you would only be eligible for a premium tax credit if you made less than 400% of the FPL, which is the federal poverty level, for your household size. If you made more than that, then you would fall off the so-called subsidy cliff, and you would notice that your monthly premiums would increase drastically and quite suddenly. However, under the Inflation Reduction Act, the premium subsidy cliff has been more or less smoothed over, at least through 2025. So now those premium tax credits are more on a sliding scale. So those with higher incomes may still be eligible for a premium tax credit. It's just going to be a smaller premium tax credit to correspond to their income level. Now, when you log on to healthcare.gov, you'll be asked to estimate your income for the upcoming year. It's very important that you try to estimate as accurately as possible, and yes, we know that can be tricky, especially for freelancers, but it is very important that you try to be as accurate as possible. If you overestimate, then you'll likely receive a larger tax refund when you file, but if you underestimate, you may have to pay back a portion or perhaps all of those premium tax credits, which is definitely not a welcome surprise. Additionally, if there are any changes in your household size or your income, you want to make sure to update that information on healthcare.gov as soon as possible. For private insurance, unlike ACA plans or group plans, you actually can be charged more based on your health or a pre-existing condition. So they can be pretty darn expensive. However, your options are rather limitless when it comes to private health insurance. There is one type of private insurance which is called a short-term medical plan. They're not so short-term, and they have drastically improved in recent years. That being said, they are not ideal for everyone, and they're actually not available in all states. But if you're a relatively young or healthy person, then you could probably access a short-term medical plan for about $100 per month. And if you are ineligible for a premium tax credit through the marketplace, this might be a great way to save money on your monthly premiums. The next cost that you should be aware of is the deductible. The deductible is the amount that you have to meet out of pocket before your insurance begins to contribute to the cost share. However, there are several services that are available, many with a $0 copay before you even meet your deductible. Usually these are the more basic services. You should know there's also a difference between the individual deductible and the family deductible. So let's say that your plan has an individual deductible of $1,500 and a family deductible of $3,000. Once you've met your individual deductible, your insurance will begin to contribute to the cost share, but just for you. However, as your family begins to spend money on their medical needs, once the amount meets $3,000, the entire family will be considered to have met their deductible. For example, let's say you, your spouse, and your child all spend $1,000 towards your deductible. That's a total of $3,000. Now, even though none of you have met your individual deductible, the family deductible has met, so your insurance will begin to contribute to the cost share. At that point, you would be responsible for copays or coinsurance instead of the full amount. Something else to know about deductibles is that there is usually an inverse relationship between deductibles and monthly premiums. For example, if you have a plan that has a higher monthly premium, very often it will have a lower deductible. Now, these types of plans are good for people who have higher medical needs. Yes, you'll pay more on a monthly basis to keep your insurance active, but you'll meet your deductible much more quickly, and this could save you in the long run. On the flip side of that, usually plans with lower monthly premiums have higher deductibles, and these can be good for a few reasons. One, if you're somebody with more regular or limited medical needs, this could certainly save you money. You're going to pay less on a monthly basis for your monthly premiums, you'll still have access to those basic services, and you'll still have access to an out-of-pocket maximum, which will of course protect you should you incur major medical debt. Additionally, some plans which have higher deductibles are considered high deductible health plans, and very often these come with a very special benefit which is called an HSA, which is a health savings account. These are great for a few different reasons. The amount that you contribute to your health savings account is pre-tax, so that can lower your taxable income, which can of course help you come tax time, and lowering your taxable income will therefore affect your MAGI, which is what healthcare.gov looks at when determining your eligibility for premium tax credits. So by contributing to an HSA, you might actually make yourself eligible for larger premium tax credits, which, as we said earlier, can save you thousands of dollars. And the HSAs themselves, those accounts, are interest-bearing. That interest is also not taxable. And you can even invest a certain portion of the HSA. Now, the money will roll over year to year, and if you're able to hold on to your HSA until you turn 65, you can use it as you would a basic retirement account. Every year, the IRS sets max contributions for HSAs, and of course, they're different dependent upon whether you are an individual or you're on a family plan. So in 2023, the max contribution for an individual is $3,850. For a family, the max contribution is $7,750. Once you've met your deductible, you'll be responsible for copays or coinsurance whenever you visit the doctor or have any type of medical procedure. And they are a little bit different. So copays are a set amount for a given service or procedure. For example, a visit to the doctor might be $25, a specialist might be $50. And generally speaking, you can find this information on the back of your health insurance card. Coinsurance is a percentage of the cost, and this is especially important when it comes to marketplace plans. So there are 4 metal tiers for marketplace plans. There's bronze, silver, gold, and platinum. And the names of these metal tiers has nothing to do with the quality of the plan itself. It only has to do with the cost share. That's the coinsurance. So for a bronze plan, the split is 60-40. Your insurance carrier will contribute towards 60% and you're responsible for 40%. For a silver, the split is 70-30. For a gold, it's 80-20. And for a platinum, it's 90-10. You will also notice if you're on healthcare.gov that generally speaking, bronze level plans tend to have lower monthly premiums. And as you move towards the platinum level plans, those premiums do tend to increase. Your copays and coinsurance will also be affected by your network. For example, if you have an HMO, then you will only be covered in network, except in the case of a true medical emergency. So if you choose to go out of network for any reason, you'll be responsible for the full cost. For a PPO, you have a bit more flexibility. So if you are in network, your coinsurance and copays tend to be smaller. If you go out of work, then your copays and coinsurance will be higher, but you do still have the ability to go out of network. Your copays and coinsurance and your deductible will all count towards the out-of-pocket max. The out-of-pocket max is there to protect you from major medical bills. If you hit your out-of-pocket max, your insurance carrier will actually take on the remainder of the bills. However, this does reset on a yearly basis. And again, the out-of-pocket max is of course determined by the plan that you choose and whether it's an individual or a family plan, but the IRS does set maximums every year. There are different out-of-pocket maximums for traditional plans or high-deductible health plans with HSAs. In 2023, the out-of-pocket maximum for a single or individual plan is $9,100, and for a family plan, it's $18,200. For a high-deductible health plan, the individual out-of-pocket maximum is $7,500, and the out-of-pocket maximum for a family plan is $15,000. And as a side note, the individual and family out-of-pocket maximums work in exactly the same way as the individual and family deductibles. Now, whether you choose group health insurance, a marketplace plan, a short-term medical plan, any type of health insurance is going to have an out-of-pocket max. You could even choose a catastrophic coverage plan, which will really protect you mostly in case of a medical emergency and therefore offer you a much lower monthly premium. Picking the right health insurance is important not just for your health and your peace of mind, but of course it's also important for your wallet. So make sure that you fully understand exactly what your financial obligations would be when choosing a health insurance plan. And if you have any questions whatsoever, please feel free to reach us in the comments or give us a call at 888-410-0344. We're licensed nationwide and there is no charge for our services. And as always, a reminder, please make sure to click that like button and subscribe to stay up to date. Thank you so much. We'll see you next time. Bye-bye.